Welcome to this explainer. Today, we're going to look under the hood of what is literally one of the most aggressive automotive expansions in modern history, VinFast. We'll be demystifying their densely packed Q4 and full year 2025 earnings to really separate the sweeping, ambitious vision from the cold, hard financial reality.
So let's start here. $3.59 billion. That's VinFast's total revenue for 2025. Now, what's really crucial to understand isn't just the sheer size of that number, but the velocity behind it. We're talking about a massive 105.4% increase year over year. In a global auto market where a lot of legacy players are fighting tooth and nail for just single-digit growth, seeing a revenue figure absolutely double in 12 months? Yeah, that is a clear indicator of sheer momentum.
But, that leads us directly to a huge question. What does it actually cost to build a global EV empire completely from scratch? Because on one side, we have this explosive, undeniable physical growth. More cars, more factories, more markets. But on the other side, we have the incredibly harsh capital realities of the auto industry. It's a high-stakes balancing act, to say the least.
Chapter 1. Record-breaking EV deliveries.
Let's talk about 196,919. That's the number of electric vehicles VinFast delivered globally in 2025. And this didn't just meet expectations, it actually blew right past management's own guidance, which was simply to double their 2024 numbers. It marks their absolute highest annual deliveries since they started, cementing them firmly as the #1 automaker in Vietnam. Going from just over 97,000 units in 2024 to nearly 197,000 in 2025 is a staggering 102% year-over-year growth. Think about that for a second. When you're manufacturing physical goods, metal, batteries, glass, scaling output by basically 100,000 extra vehicles in a single year requires an immense logistical feat. It really shows serious sales momentum and a supply chain that's maturing at lightning speed.
Okay, let's dive into what's actually driving these sales. It all comes down to a complete, comprehensive 7-model EV lineup. Rather than betting everything on a single hit car, they've built an entire ecosystem. They've got something for every lifestyle and every price point, from the mini SUV VF3 all the way up to the luxury VF9. And that strategy really paid off, helping them grab an estimated 36% market share in passenger vehicles in Vietnam by year's end.
But it's not just about passenger cars. VinFast is rapidly expanding into a full green mobility ecosystem. Get this, they delivered over 406,000 e-scooters and e-bikes. That's a massive 473% jump from the previous year. And in the fourth quarter alone, commercial vehicles and their EC van made up nearly half of their total deliveries. Plus, driving their global ambitions, overseas markets hit 18% of Q4 deliveries, and they're backing all this up with a massive global footprint of 424 showrooms.
Moving on to Chapter 2, Global Expansion in Manufacturing.
The speed of their physical rollout is honestly breathtaking. Just in 2025, VinFast inaugurated a new plant in Ha Tinh, Vietnam, opened another one in India, and launched a facility in Indonesia. Both of those international plants boast a Phase 1 capacity of 50,000 EVs, and looking ahead to 2026, they're slated to resume construction on their highly anticipated North Carolina facility. They are literally laying down heavy industrial roots in major high-growth markets all at the exact same time. Next up, Chapter 3, Beyond Cars, AI and Robotics.
Now, what's really fascinating is how they are positioning themselves. You'll hear the term software-defined vehicle, or SDV, thrown around a lot. Let's translate that corporate speak. Essentially, an SDV means these cars function more like giant, highly advanced smartphones on wheels. Because of distributed computing and over-the-air updates, the vehicle you buy today can actually get smarter, safer, and much more feature-rich over time without you ever having to set foot inside a dealership.
And their push into deep tech goes even further with the Vin Robotics ecosystem. I know it sounds a bit like science fiction, but this is operational reality right now. They're integrating humanoid robots to automate material handling on the factory floor. They've deployed robot arm visual AI to spot manufacturing defects in real time. They're using physical AI for adaptive automation. And on the consumer side, they're mapping a path from Level 2+ semi-autonomous driving straight toward Level 4 autonomous robocars. They're using AI not just as a tech buzzword, but as a core tool to make manufacturing cheaper and their products radically advanced.
Which brings us back down to earth for Chapter 4, the financial reality. All right, here is where the rubber meets the road.
Top-line revenue jumped tremendously from about $1.7 billion in 2024 to roughly $3.6 billion in 2025. Gross margins also improved, moving from negative 57.4% up to negative 42.5%. This tells us they're definitely getting better at absorbing fixed costs as their volume scales up. But we have to look at the bottom line. Net loss has widened from about $3.1 billion to a staggering $3.87 billion. The sheer expense of opening global factories, pouring massive R&D into robotics, and scaling those sales networks is incredibly capital intensive.
So this is the ultimate juxtaposition, right? The vision versus the reality. On one hand, we've got a company sitting on roughly $3.1 billion in total liquidity, hitting astonishing top-line momentum with 105% revenue growth and executing triple-digit delivery growth. But balanced against that reality are persisting negative gross margins of 42.5% and widening net losses approaching $3.9 billion. It perfectly reflects the heavy capital required to maintain this kind of blistering velocity.
We are truly watching one of the most ambitious global rollouts in modern corporate history. They have the products, they're building the physical footprint, and they are absolutely pushing the boundaries of AI in manufacturing. But here's the big question. With revenues doubling while those heavy losses persist, will VinFast's high-stakes gamble on massive global expansion and robotics ultimately pay off? Will it actually lead them to profitability? It is a fascinating structural story, and I gotta tell you, the next few quarters are going to be absolutely critical to watch. Thank you so much for joining me for this explainer, and keep learning.